I find that the harder I work, the more luck I seem to have. Thomas Jefferson. My friends, as we look at these charts, everything down for the day, but gold up big. We'll get to it. It was our top pick on Friday. But let's start, as we always do, with the S&P 500. It pulled back a little over 0.5% for the day. We were decently up on the S&P on Friday, but of course, what did it do? It didn't give us the green up candles that we needed on that half-day chart, and of course, we did not jump into it. Where does that lead us? Well, we're still positive today. We are 75%, not 80% bullish. We see, upwards of the potential for many dollars of up movement with a 70% back test accuracy, over $20. Jumping in point is around where things are right now, but guess what we're going to have? We're going to have that green candle being laid down. As far as any kind of entry point, we're going to need a green Heikin-Ashi candlestick with increasing volume before we jump in. That's why we didn't jump in today. That, again, is why you watch these charts and you execute accordingly. So we're still holding on, keeping the powder dry on the S&P 500, and we will continue to watch, wait, and see. As we look at things, again, we are positive on the S&P. We just got to have those candles line up for us. Let's see where we are on the NASDAQ. Pulled back just a little bit more, right at 0.60% down. And of course, we can see down in the morning, not so much in the afternoon, but it didn't lay down those green candles with the decent volume. So, of course, we didn't jump in. But we are still 70% bullish on the NASDAQ 100, looking for the potential of $20 or more in movement. 65% backtest accuracy. Again, those aren't the kind of numbers I like to trade on. Why? Because they're not high enough. I want better percentages. And as we move on away from stocks and we get to 20-year U.S. government bonds, we've started the week off with a red down candle. We look at the Friday, Monday, and of course we have down movement on this 2-day candle and not quite average volume. So again, don't have the volume matching anything over the last 3 prior weeks. Lots of volume in that big drop down, but we haven't hit the low point of that yet. So again, pulling back 0.56% for the day. Where does that leave us? We are 80% bearish. About a $2.24 move down we see as possible. 80% back test accuracy. And again, you can keep your eye on things. You can see where we've had decent volume starting all the way back on where things had topped off and started moving over last Wednesday. And things have just been jamming down as we start this new week. I'm trying to figure out some way to draw a trend line. Not much of a trend line there. I guess that's a trend line of sorts. And we can see we have bypassed, we have gone below it. And we'll see how the week continues to move along. But we are negative. We are bearish on 20-year U.S. government bonds. Failed to catch any fire last week. The green up candle as things died. We can see where that death started on Wednesday and then just have continued to move down. So keep your eye on potential bearish move on U.S. government bonds. You might say, Tom, how do I trade that? Well, first, you could become a Patreon member and get our 3-part series, Option Made Simple, The Charting Wealth Way, and you could practice trade puts. The other thing you could do is, of course, and I'll put this again at the end of today's video, you could go to something like Tango, Bravo, Foxtrot. What is that? TBF. That is the ProShares short. It goes up when bonds go down. It is the single short for U.S. government bonds, and we will move that over and see if indeed, as we track the change, how things go. But of course, the inverse fund goes up percent for percent as the underlying equity goes down. Something for you to practice trade, see if you like it. There are problems with it. If you take that trending and put it at the end of today's video, options made simple, not options made simple. Inverse funds, how to make money when markets crash. You'll understand a little more of the complexities. There are heavier fees. These inverse funds are recalculated typically on a daily basis. You can magnify your losses, but if you're going in the right direction, it's just at least something for you to practice trade. See if you like it, if it works for you. Let's move on to gold. Gold, our big winner. Where were we on Friday on gold? 80% bullish, 85% back test accuracy. Told you we had about a $12 potential up move. Well, gold came through for us on Monday. After a weak last week, we had that doji. Things did turn around, and we can see where things started moving up nicely in the morning and about the same in the afternoon, up right at 3%. We continue to be bullish, 85% in gold. That is our directional probability over the next 5 days, and an 85% back test accuracy. It's nice to see the precious metal catching on fire again. I tell you what, just for giggles, let's look at SLV. See where silver is. A lot of times when precious metals heat up, well, silver is not. Look at that. I mean, it was up for the day, 2.99%, after many days of trudging down. Well, again, though, I'm sorry. I'm looking at gold. Let me see. Silver, 1.2. Yes, silver up 1.24%. So up in the morning, about the same in the afternoon, it looks like. Maybe silver's turning around. If you love silver, keep an eye on things. See if silver ends up going your way. Just trying to update my little trend lines. I love trend lines, as all of you know. So let's move on from gold, and we'll go to Bitcoin. Bitcoin pulling back 2.73%. Where does that leave us? We were about 75% bullish on Friday, 80% back test accuracy. And again, with, of course, what? We've got to see, of course, the green candle being laid down. If that doesn't happen, then we don't pull the trigger and pay attention to those percentages, and we did not have it. So we did not enter that. We can see how Bitcoin, turned green back on the 14th of April. Nice week beginning the 21st of April. That following week, the 28th, last week. This week, we're staying on the trend line, but again, as we look, you see that red volume there on the week. That means we opened lower than the prior close. You can see that there. But as we look at it, it tells us, of course, of some weakening. We can see we don't have a lot of volume going back on 1, 2, 3, 4, 5 two-day candles as things have slowed down as it started topping. And, of course, really down in the morning. Looks like it may have recovered a little. It's hard to tell with these Heikin-Ashi candlesticks in the afternoon. But again, didn't lay down for us any bullish candles so that we might jump in. But we remain 70% bullish, 65% back test accuracy. So where does that sort of leave us? Leaves us really paying attention a lot to the bearish down move on TLT and the bullish up move on gold. Also keeping an eye on the S&P and then the NASDAQ. So again, it's sort of 1 is gold, 2 is bonds, 3 is the S&P, and then tied for last would be the NASDAQ 100 and Bitcoin. That's where we are, folks. Always love to hear from you. If you have any questions, problems, concerns, why don't you reach out to me? cw@chartingwealth.com. I love responding to you guys. God bless. All the best from the whole team at Charting Wealth.